This video is brought to you by Blue Guardian, the only prop firm that protects their traders.
What is the probability that if price at least comes into here that we're going to go overall short? It's not as probable as going long, right? Because we're bullish. So we have a couple of areas, and I don't care if I lose this trade here. It doesn't matter to me because I have more probable regions. Because if I lose 1% on this trade and then win 1% on this trade, I won a 1 to 18 and I lost 1%, so I net 17%. That's why professional traders, they do not care how many trades they win or lose because they stick to their trading plan. They maintain good psychology. They treat each trade as its own and they build confluence around their trading. And they're staying disciplined every single day and looking for these highly probable regions. What's going on, fellow traders? Welcome back to another pre-market analysis video. And before I get started here, I want to go over a couple of steps that will really help you in your more intraday, intra-week swing trading opportunities. That really has helped me. This is exactly how I go about understanding and analyzing the markets from a top-down perspective. In just a couple of steps, you're really going to see the bigger picture here and understanding that losers are a part of the game. And also probabilities are going to be your friend, right? At the end of the day, professional traders don't care about winning and losing. They care about discipline, psychology, and long-term trading. All right, we don't care about losing 3 or 4 trades in a span of a week because we can always be profitable in the month or the quarter or the year, et cetera, et cetera. So what professional traders look for are probabilities when it comes down to their trading. Following your trading plan, understanding it's not about pips, it's about percentages, and it's about the long-term growth. You're going to be very successful.
Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and overtrading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
So how I look at this in a couple of steps is I identify on the lower time frame areas of interest that I want to trade. Now, I'm going to go over all of this stuff when we go through all these pairs, but just quickly, you can see that this is an expansion, that's a pullback, that's an expansion. So if we're bullish, where would we want to see a pullback into? Pullback to continue, right? Where do we want to see that pullback within the previous pullback, right? So because obviously we would, if we break that structure here, it could likely be a break of structure, right? Same goes for the higher time frame. If this is an expansion, that's a pullback. This is an expansion, that's a pullback. This is an expansion, right? This is just lower time frame trending, right? It could easily go like this. That would be one expansionary move, right, in the higher time frame. So the same thing applies here. That's one swing point. So we would look for a pullback before continuing. So, but I just said that we could easily pull back into here before going long. But what if we break? Isn't that a break of structure? Well, this is where understanding higher time frame analysis and trend is going to be your friend here. So we know that this is the lower time frame trend. So we would likely trade from this area here, which I'll go over in a minute. So that's a highly probable region and it fits all of our rules, which again, I'll go over in a second. But if it breaks, where's the next highly probable zone? Is this a break of structure or is this a continuation and a liquidity run? In this case, on the higher time frame, we're not looking for this trend. We're looking for this trend. Low, high, low, high. So in that case, we're still bullish from a higher time frame perspective. This would merely be a lower time frame liquidity run for continuations. So that's your higher time frame trend. So the probability lies in here now to go long. Now let's just say that price ends up breaking and we do something like this. Well, now we have to look at the higher time frame trend. And we understand that this is an expansion. This is an overall pullback. This is an overall expansion. So if we break, is it a break of structure? Maybe short term, but overall, it's probably just a long-term liquidity run, sweeping liquidity above every single swing or below every single swing point there and pulling back into a higher time frame region, which is going to be this level of demand, aka this last selling volume that failed to generate the lower low below the previous low, which stopped and made the higher high. This was the end of the pullback. So we identify the lower and the higher time frame pullback regions. We can gauge highly profitable and highly probable zones that will aid in our profitability, right? So all I do when I trade is I look for the lower time frame areas of interest, continue to scale out. Medium term areas of interest, higher time frame areas of interest, and higher time frame areas of interest, right? All within my overall rules. So as we were trading in here and now in here, what we will understand is that this is a pullback, this is an expansion. So where is the end of the pullback? Well, it's right here. This is the last selling volume that failed to generate the lower low, that ended up breaking structure, this swing point, making the higher high. So of course, when price was trading up here, I was looking for that pullback into that demand zone. We didn't quite get it. We ended up continuing. But when we have that overall pullback, that's where we'd like to come into to go long. This is also a break and retest of this wedge. So retail tried to go short here naturally. And of course they lost. Price went to the upside. So that acts as a great area for smart money to come back into to retest that demand and go long. So that's our first level. What if price breaks? Well, we understand that from a higher time frame perspective, or really a medium term time frame perspective, that we have this as a swing, 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 swing. So if we break this, if we don't continue with this trend here and we actually break, then we'll see this as the expansion, this as the higher time frame pullback, and then we look for another expansion again. So where would that be? This would be sell side liquidity. So we would look at the pullback on the higher time frame, which is right here. And sometimes it's going to be very violent. It's not always going to be the typical pullback like you see in these stupid courses and in these retail videos that you guys watch, right? It's not always going to look that pretty. So let's scale into this region and build confluence. Well, we have a lot of imbalance. We have that psychological level 161 on a lower time frame. And this is where fundamentals can help as well. But what you'll understand is that we had news that came out. We created buy and sell side liquidity. We swept liquidity sell side, buy side, sell side, and then we finally went long. So we're shaking everyone out of the market. But at the end of the day, the end of the pullback is right here at this last selling volume. This is where we finally started to go long. So this in here is that last selling volume, which turns into that demand. So those are our two regions, and it happens to line up with 160.5, right? Psychological level there. So with that being said, if we don't come into that level, or meaning if we break it, even though that's a highly probable region, we have more highly probable regions to play off of. Because at the end of the day, trading comes down to probabilities. So if you were to bet your own life on whether to push the buy or sell button, what would you push? Let's use common sense here. What would you push? The buy or sell button. You would push the buy button. That would just be blatantly obvious, right? Because what are we? We're extremely bullish. So what's the probability that we go long versus going short? It's extremely probable that we're going to continue to go long versus to go short. So we look for lower time frame swing points like we did, high, low, and just play off of these supply and demand flips, play off the liquidity runs, play off the intraday price action. That's a level. If we break, we're likely to come into our next probable zone. And again, we're building confluences using the rules and concepts that we have for ourselves within our trading plan because we're disciplined traders here. I'm sure all of you guys are very disciplined traders. You guys know how to do that. Imbalance. We had liquidity on a lower time frame. This is a swing point. We don't want to come below this low here. We had news. So this was used as the excuse to propel price forward. We have psychological levels. So that would be our next probable zone, which is that 161 region. If we come even lower, 160.5 is that last point, and then our stop is below the low. Because what is the probability that if price at least comes into here, that we're going to go overall short? It's not as probable as going long, right? Because we're bullish. So we have a couple of areas, and I don't care if I lose this trade here. It doesn't matter to me because I have more probable regions. Because if I lose 1% on this trade and then win 1% on this trade, I won a 1 to 18 and I lost 1%, so I net 17%. That's why professional traders, they do not care how many trades they win or lose because they stick to their trading plan. They maintain good psychology. They treat each trade as its own. And they build confluence around their trading, and they're staying disciplined every single day and looking for these highly probable regions. Now, what if we do break? Well, then fine, you lose 1, 2, 3%, whatever. And I would probably use this as 0.5% and 0.5% just because this is the same region. So that's one trade, and these two would be one trade. So overall, 2% would be lost if you risk 1% each. If it breaks all the way down, we're using the same concepts as we did on the lower time frame, but for the higher time frame. If this is a higher high and that's a higher low, that's a higher high and that's a higher low. What do we naturally expect? A higher high. On the higher time frame, if this is a higher high and this is a higher low and this is a higher high and this is a higher low and this is a higher high, what do we naturally expect? A higher low for a higher high. If this is a higher high and this is a higher low and this is a higher high and we break and have a pullback, where are we likely to come into? Well, our last selling volume, like we just discussed. And what do we naturally expect? A higher high. We're just literally going from a zoomed out to a zoomed in and a zoomed in to a zoomed out picture of the exact same thing. There's only one price on CHFJPY. It's not multiple different prices. That's why time frame doesn't matter. Price is fractal. The markets are fractal. Everything happens on every single time frame. So when one time frame breaks, you zoom out to the next and see the next region. When that time frame breaks, you zoom out even further and look for the next region. So if this one loses in here, we look for the next one, which is in here. If this one loses again, we look for the next one. We keep doing the exact same thing until a higher time frame starts to shift structure. So what does that look like? Where would the higher time frame shift structures if we break here? Now at that point, would you classify this as bullish? I mean, yes, but at that point, we're probably going to continue short from the higher time frame. And then we can start to shift our bias. But that's not to say that we only have to look for longs. This is from the higher time frame perspective. So if we come into these regions, great, we can long it. But everything intraday, we can potentially be shorting or longing, who knows? And this is where we just have to use our overall concepts and rules to facilitate this. If we get liquidity and we sell to buy, could we go long? Sure, right? The counter trend could be over. We don't have to come into here. It's only if price wants to that we have the setup for a highly probable setup. If we build liquidity, sell to buy, maybe reprice, continue, that will be a great area for demand. And maybe we'll just continue from there, right? And at that point, we may have an unmitigated, let's just say we have an unmitigated level of demand here. So we could either continue with this structure or we have an overall pullback because we have this structure here. We might break, have this overall structure to pull back into here, just like we have, right? It's following the exact same things every single solitary day. And it's not that difficult. It may look a little bit confusing, but once you get the hang of it, it's like clockwork. We're going through the same exact process every single day. If we see it, great, we place it. If not, we keep moving on. That is how I train my students to look at the chart. So they're not sitting in front of the charts for 24 hours a day trying to find something that's not even there. That's why I also like intraday, intraweek trading, because I'm not tied down and sitting at my desk with my brain going berserk, making me think that there's something to trade and getting me anxious because I want to be involved in the market, that I place a random position and not follow my rules. We need to be able to do the right things, but do it simplistically. We don't need to go crazy. We don't need to overcomplicate things whatsoever. Right? That's a potential buying opportunity. So what happens now? Well, you can even go with the lower time frame. Look at this: low or high, low, high, low, high, low, high. We have equal highs, so that's an understanding that there's buy side liquidity. We could break structure here, which we did. And now what we could see is we could see that failure to generate the higher high. We could see a lower low. We could see a pullback into this supply zone anywhere in here, and then short off into that first objective point, in which we then look to long it. Right? So we're following every single time frame structure to a certain extent and looking to continue to trade with the highly probable zones. And if you lose, you zoom out or zoom in, depending on which direction you're trading, to the next probable zone. So we just talked about zooming out, right? If we lose this one, we zoom out, we have this one. If we lose that one, we zoom out, we have this one down here. Well, what about zooming in? Well, this is where we would look to do this. We would look to, if price comes into this region, let's just say we create some sort of trend, we would look to zoom in and then look for the break of structure to the upside to get an additional entry. What if we don't come into that region? Well, we don't have to, but what would I look for? I don't know, maybe price comes into here somewhere. That's an area of demand. Maybe before that we build liquidity and then we sell to buy. That's scaling in. And then maybe we scale into a lower time frame, maybe 15 minute, go down to the 10 minute, and then maybe there's an area of demand right here. And then we look to pull back after the break of structure to go long. That's how we scale in the current direction of trend. All right, that's scaling in. We just talked about scaling out. So it's very simple, very easy steps in which to follow. Highlight these areas. But guys, if you don't understand the concepts of liquidity purges and structure and top-down analysis and supply and demand flips, but you resonate with this type of strategy because it makes sense to you, please feel free, head over to my website, aerialfxtrading.com, book a free call with me. I'd love to see if you are the right fit for our program. If so, I'd be glad to personally mentor you one-on-one and help you get to this level. If it's not the right fit, we'll send you on your way. And I'll even give you my free trading plan. Trading plan that I personally use, I'll give it to you for free, just for booking a call with us. All right, but only serious traders only. Anyways, continuing here. So that's CHFJPY in a nutshell. I'm not going to go over everything on all the other pairs. I just wanted to give you guys a glimpse as to how we break down charts from a simplistic standpoint, utilizing structure, utilizing sweeps of the liquidity, utilizing supply and demand flips, all that good stuff, which is very simple if you just know how to use it together.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
Let's go to CADJ. Again, very similar. From a 4-hour standpoint, we are bullish. From a daily standpoint, we're bullish even. So we have this trend line here, 1, 2, 3 touches. There's buy side liquidity. I would love to see that run. I think 109.5 above that high, maybe 110 above the trend line liquidity is definitely on the table. We can see across the board that these XXXJPY pairs are making a move to the upside. We are extremely bullish, right? Like I said before, use common sense. Are we bullish or bearish? Bullish. Okay, cool. Let's look to trade and buy this. All right, so the structure, higher high, higher low. We're looking for that higher high now. So following the lower time frame structure trend, we can just see high, low, high, low, high, low, and we're just following all the way up. When we created that third touch of the trend line from these previous 2 touches over to the left, we had a reaction from it. We ended up creating equal lows right in here. We had a reaction from it. We came back down and we swept the equal lows. This is not an equal low to this low. That is a liquidity run. I don't care if it's a 100 pip move below it, a 5 pip move below it, or a half a pip move below it. It's a liquidity run. It took the liquidity. This is the lower price than that. So we had the reaction from that, and this is the exact same look as what we had here on CHFJPY right here, because it's the exact same time in the exact same scenario, right? It's funny how these moves and this structure is formed across the board at the exact same times. It's because price is already pre-planned to do a certain thing, and news is usually used as the excuse to propel it in its overall direction or against its overall direction to mitigate before going in its overall direction. So news is not anything random, guys. It's always pre-planned. It's always an excuse and a catalyst to drive price. Right? So continuing here, we made that higher high in the market. We came back down. We did not quite come into this repricing. Now, what do we look for? And it's very simple. Just like I told you before, look for the counter trend. Where did it break? Well, it broke right here. Where was the last selling volume? Well, it was right here. Why? Because we had a low, a high, a low, a high, a low, a high, a low, a high. We failed to make the lower low, and that's where we made the higher high. So that will turn into demand. And we didn't quite reach that point. We ended up coming back down, making relatively equal lows, and then we expanded again. So when we don't come into that level and then we expand, either one of two things can occur. All right, let's just say this is a higher high in the market. We could either play off the previous swing point, in which this case I just wouldn't anyways, even if we did come into here first, just because this is relatively equal low. So I really don't want to touch that. But let's just say, we did this instead, and it was a clear shift. Would I look to play off of a previous level of, let's just say the demand's right there. I don't know. Let's just say that, right? Making this up. But would I play off of that? I could. That's one probable region. And if I lose, where's the next probable region? The sell side liquidity into this level of demand, which would be here. So who cares? Sometimes I would win that, and sometimes I would lose it and then win that one, right? You zoom in, you zoom out, you understand the levels, and you place your trades, and you don't care if you win or lose, because overall, if you're following your trading plan and your discipline, you're going to be profitable overall. That's how it works. But the reason why people continue to lose is they can't get out of their own way. It's not anything that they don't understand. It's that they can't control their emotions and follow their rules every single time. Right? That's the difference between an amateur trader, which 99.9% of traders are out there, versus professional traders. So what I'm looking for, either one of two things. Either we come into here, right, the previous swing point. So this is the last selling volume before the up thrust. So maybe into this imbalance. But because I'm not trading this, I would look for that region and maybe look for liquidity to be ran here, something like that. And then I look to pull back and buy it because of that reason. And I would look to buy it there. If not, and if it just continues short, then I'm looking at this as an opportunity to get back into the market because we swept liquidity and we came into the repricing there, and that would be really good to look for longs. All right. So that is my bias on CADJ. It's going to be the same across the board with a lot of these yen pairs. So we just went over CADJ and CHFJ. Let's quickly go over AJ. Same sort of deal. We are in this pullback phase, right? We are making lower lows and lower highs. Could we make a lower low before making a higher high? Potentially, because we still are higher time frame pulling back, even though we're higher time frame bullish. I am looking for longs though, because like we had before, at the same time, we had the huge, with the news event, the huge push and the huge reaction after that. So let's look at the higher time frame. Well, if this is an expansion, that's a pullback, expansion, pullback, expansion, pullback, expansion, pullback, expansion. So this is the range. Currently, we're in the range right now. We're pulling back within the range. So if it's the range between that low and this high, we're making a higher high and we're soon to make a higher low, whether that be right here, in which we already made, or we come a little bit lower into a previous selling volume before going long again. So that could be the low before going long. We could stop and go long now, or we keep going a little bit more into, and I'll just scale out a little bit, because this was the expansion. This is the pullback. This is the expansion. This is the pullback. Where's that last selling volume? Well, low, high, low, high. We failed, and then we made the higher high because we had low, high, and then we had low, high, low, high, low, high, failed, higher high. So this is the last point of demand, that last selling volume, which is also the last point within this range, low to high. This is one expansionary move. So this last selling volume falls within that. So that's where we could come into if we decide to have one more leg to the downside before making that overall higher high. However, across the board, we could be looking to go long now on XXXJPY. We have equal highs. We had that manipulative move south and then north again. We have equal highs here. And then we started to generate liquidity. So we had that last repricing. It didn't quite come into it. Swept liquidity, didn't quite come into it. Built liquidity again. And now we've swept it again. We've actually swept this previous low. So either we're going to stop now in here and go long up into at least 96 or even a higher high overall if you swing trade. Or we're going to have one more final push into that level of demand, sweeping sell side and going long. So again, like I said before, we take the opportunity, and we actually had an opportunity here. We had an opportunity off of this level here, which is, remember when we swept liquidity, this was the last selling volume. You see that candle, and then we made the higher high. We had equal highs. We started to build liquidity prior to that level, right? So we swept it, had a reaction, but we didn't have any follow through. We never made the higher high. Instead, we continued with this downtrend, right? So we had that level, we lost. So we go again. We have this level here from the higher time frame. Sell side liquidity, boom, we're in a little bit of profit. Great, if it goes long, perfect. If not, we go to the next level, which is down here at 91.35. And if that loses, well, then at that point, the whole structure probably starts to shift. But again, probabilities. What's the probability that we go long in an uptrend? Higher than going short. That's all I got to say about that. Higher than going short. So that is how we have to look at it. Because I guarantee you, if your probability is higher for every single trade, naturally, you're probably going to win more trades than you lose. And if you don't, but you have good risk to reward, it doesn't matter anyways. You're still going to be profitable. There's so many ways to be profitable in this market. It's just figuring out what way that you know how to do it best. And it's not that difficult. It's just following a few steps. So that's AJ. EURNZD, the same can be applied. Let's look at the lower time frame. Lower time frame is high, low, high, low, high. Could be a low for a high. Where's the medium term time frame? Well, we have this expansionary move. We could have an overall pullback. We can have expansionary move. Where's the higher time frame? Well, we have this, we have this, we have this. Could we have a pullback in here to go long? Maybe somewhere into that region? Sure. But are we even close? No, that could take months or years or whatever. So we're not even going to talk about that. But that's exactly what you should be looking for. That would be the level in which you would look for if price had an overall retracement. All right, but we're still trending on lower time frame bullish. So what we have is really this expansionary move. We could have that pullback for that expansionary move. So let's just go into the lower time frame here in the 15-minute. What we had a couple weeks ago, I think it was last week actually, was this last selling volume. So this was the pullback here. This was the expansion. Okay. And what's interesting about this is that we came into this very nicely, but we stopped here first. We swept buy side, meaning this previous high, we swept it, enticing buyers, coming back down, taking their stops, enticing sellers below this low here, but really it was just a mitigation to go long. So what did we do? We had that buy to sell to buy. We had the repricing, so that last selling volume, and then we went long. So that could be an area in which if price breaks, it would likely entice short traders because it's a break of structure. Really, it's not. It's probably just a liquidity run because we're overall bullish, in which we come into that level and go long. All right, what we can also do is maybe pull a trend line here to see if we have anything interesting. Not really. I mean, kind of. Almost. You could have that third touch of the trend line that retail's trying to play off of. You could either sweep that and go long, or we can maybe sweep that and come into our next level. Now, lower time frame. We have high, we have a low. We have a high, we have a low. We swept liquidity in the process, sell to buy, reprice, continue. High, low, never made the higher high. In fact, we stopped before that. So this could act as sell side liquidity. So where's our area of interest? It's not that hard, guys. Where's our swing point? We just recognized that that's a high, that's a low, and that's a high. This is not a higher high. So this is still the range of the market. Where's the last selling volume? Right here, right there. Low, high, low, high, low, high, low, high, failed, higher high. That's the repricing. So we could next week sweep sell side liquidity, that low, come into that level and go long. And if we break, we have our next level to go long. And if we break after that, then we could be switching structure. At least short term, we could probably have a deeper retracement somewhere in here because this is the overall higher time frame structure, right? It's all about understanding structure. Then you have your regions of price. Then you have your probability zones. Then you can play off of your intraday levels and liquidity runs, all right? EURUSD. EURUSD is really toying with me right now, to be honest. I think it's kind of make or break time. However, I do have another level here, and this is something that I want to just mark off. Just mark it off with horizontal array, and it's going to be 1.0. Where's the high there? I think it's 7.8. I want to make it 7.8. So I want to make this pretty for you guys. There we go. So higher time frame. High, low, high, low, high. Where could we have a pullback before a higher high? Well, look at the overall pullback of the last swing point. That's the pullback. That's the expansion. So this is the pullback. This is the last selling volume. Why? Because this was the last push down that failed to make the lower low within this counter trend that ended up breaking structure and making that higher high. So we could come into that 1.0780, and that would act as sell side liquidity below these lows, right? So sweep sell side liquidity here and then go long. Or we follow the lower time frame structure, which is right here, high, low, high, low, high, low, and we just continue like that. We have multiple regions. So right now we're currently sitting at that extremity. And we're seeing that we're building buy side liquidity. 1, 2, 3, 4 touches of that trend line. If I go to the VFI indicator that I like to use, we can see In this case, we really don't have much volume divergence. On GBPUSD, in which we'll look at in a minute, we do, but we really don't here on EURUSD, which is fine. It's just a confluence. We don't absolutely need it. But I would like to see, right, the accumulation and then maybe the expansion, the break, and then the pullback and the continuation, right? Because we're at that extremity. So if we break, then we have that other region, and then we continue to look for longs. So at this current time, I'm still looking for longs. We can see that we built buy side and sell side. So we swept buy side first, came back down, swept sell side. So it'd only be right if price went long, and I think it will. I just have to be a little bit more patient here.
Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot.
GBPUSD, so same sort of deal with GU. We can see we built buy side liquidity, all these touches, 1, 2, 3, 4, 5 touches, boom, buy side, swept the liquidity, came back down and swept this previous low, that liquidity. And now I think we're going to take out this high. So that buy to sell to buy, right? And the reason for that is because we're just following the structure. Same thing applies. If this is a higher high, this is a higher low, and this is a higher high in the higher time frame, boom, 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 where is the last selling volume? Well, it's very difficult because you have all these swing points in here. I'd probably just say right in here, that area of demand. That would be a nice overall pullback zone for continuations, right? We haven't come into that yet, so let's just be patient here. So now lower time frame, high, low, high, low, high. So until we break this level, we're still bullish. So we should still look to trade off of the level to go long. If it breaks, then we can trade off of the higher time frame structure here, right? To look for higher highs again, because we're overall bullish. All right. So if that's a high, that's a low, that's a high. Let's look at the overall pullback here within here. Well, low, high, low, high, low, high, low, high, failed, higher high. And that's where we started the uptrend. So this imbalance move, this straight buying volume, we could fill that up, come into that level of demand, that last swing point, right? That's the last extremity point. Because if that's a high, that's a low, that's a higher high, this is a higher low because we haven't broken this low yet. So we came into that level, created buy side liquidity, swept it, buy to sell, and now we're looking at potentially to buy. Because this low is swept, that's a liquidity run. And we built liquidity prior to coming into that level again. Equal lows, swept it, sell to buy. So now that this counter trend structure has been broken, low, high, low, high, low, higher high, and now we're building liquidity. We'd like to see, we're building liquidity here. I'd like to see another sell to buy to go long. And now we shouldn't come below here because we've broken this counter trend structure that way to the upside. So we should start the trend like that and take buy side liquidity. So now that we understand that, let's scale into a lower time frame. And I think it's on maybe like the 10-minute. There it is. So after the equal lows were run, sell to buy, we repriced. So a little repricing area of demand, and that's where we ended up making the higher high. So we could sweep all of this liquidity in here, these equal lows, maybe next week to start the week. So sweep Friday's low, come into that region of price and demand, and then go long. That's what I'd like to see on GBPUSD. All right, continuing USD Swiss franc. So I know GBPUSD, USD Swiss franc are pretty much opposites of each other. However, I still like further upside on USDCHF. And I like upside on GBPUSD. It's probably not going to be the same. One will probably win, one will probably lose just because they're inversely correlated. But we still have to treat each trade as its own and build confluences for each trade. So from a higher time frame perspective, are we bullish or bearish? We're bearish. Lower low, lower high, lower low, lower high, lower low. Okay. On the lower time frame, we have low, high, low, high, low, high, low. So where's that last buying volume in this pullback before we went short? Well, we kind of have two. We have like one right there and then like one right there. So now that we've made a high and a low and a higher high, we're in this pullback phase. So that this would be the area for objective, meaning that's the likelihood or the area that's highly probable that price will come into if it does decide to continue short. If it doesn't, we're looking for longs anyways. But if it does go short, it should go short from these levels. So since we're counter trend bullish and we haven't come up into objective, it's safe to say that we should still continue to look for long setups. All right, so let's just get rid of all this and go down to a lower time frame. So those are our objective regions. Now let's look at structure. Well, in here, we swept liquidity just by a little bit. High, low, and then we start the high, low, and we can see, I'll scale in a minute. And then we have another higher high. So currently, that's the range, the pullback, the range, the pullback, the range. And we could make a higher high, but overall, I'd like to see a pullback for continuations. So let's just kind of scale into each individual play here. Well, the reason why I have this box drawn out is because first and foremost, it was the result of this sell side liquidity run into a level of imbalance, which I'll go over in a second. But this was the end of this pullback. You can see this is just an overall pullback before continuing. Also, 1 touch, 2 touch, 3 touch, 4 touch, a lot of sell side liquidity. So I would like to see that as an expansion and an overall pullback or sell side liquidity run to come into a level, which I'll go over in a minute, to then go long again and make a higher high into the objective region, because we're building confluence here. So let's scale in. Why did that wick occur? Why did we not only sweep liquidity, but come into that exact price point? Well, I'm going to go over here. And the reason for that is because we had, just scale in, lower time frame. Maybe it was 15 minute. I'm not quite sure. Oh yeah, I guess you can call it that. We had that 10-minute time frame repricing right there. But we also had on the 15-minute, really just that 15-minute imbalance between that wick here and then this wick here. So just straight buying volume. You could also say that that's a repricing, and that is, but we already kind of came into it. So really just buying below the previous swing because that's sell side liquidity, and so is that. Guys, if I'm confusing you, we have a step-by-step course to go over exactly how we trade. And it's really not difficult. It's just putting together a series of steps and putting it into a trading plan and following it every single day. The people who continue to fail are the people who are trying to switch things up all the time because they're not winning every single trade. You're not going to win every single trade. You need to stick to a trading plan to keep yourself consistent and disciplined. That's how you become profitable. It's not about winning every trade because you're not going to. Zooming out. We're looking for continuations, high, low, high, we're looking for a higher low. Let's scale in here. What can we find? I think this happened to be on the 1 minute. This is why you can't just, people ask me all the time, what time frame do you trade off of? What time frame? I trade off of any single time frame that makes the most sense to me. I hardly ever look at the 1 minute. But the fact that the 1 minute time frame shows me that this huge sell side liquidity run into this level with an immediate reaction and an immediate repricing to go long, that would be that area of interest. If I go to like the 4 minute, you can't see that. So am I trading off the 1 minute or am I trading off the 4 minute? Or am I trading off of the 15 minute or the 25 minute? It's the exact same area, guys. It's not that it's one time frame over the other. It's what time frame looks the best based upon what the market is showing me. What's more pretty? Fine, there's nothing on the 4 minute. I can't really see anything here. Okay, cool, go to the 3 minute, nothing, 2 minute, nothing, 1 minute. And it just happened to be very pretty. Let me just zoom out. Happened to be very pretty the fact that we created equal lows prior to this level. So that's sell side liquidity. And we had that beautiful repricing right there. So that's the region in which I would like to see price come into. So that's why I have that box drawn. You can't see that from an hourly perspective. Right? So I don't trade off of the hourly every time. It just depends on what the market is showing me. If there was a clear sell to buy, reprice, continue, then yeah, that would be that hourly zone. But in this case, it's the same zone. It just looks better on the 1 minute. That's why time frame does not matter. It's all fractal. I'd like to see that overall pullback. I like to put X's where liquidity is for continuations long. That's USD Swiss franc. Couple more. NJ, same sort of deal. We're in a little bit of profit at the moment. 4 hour time frame. If you're looking at it from structure standpoint, we have the lower time frame, which is high, low, high, low, high, low, and then we look for a higher high. Why? Well, because in here, this was the pullback. That was the last selling volume before the expansion. So that's the demand. Boom. That's why we came into it. This is the pullback here. This is the last selling volume before the expansion that created equal highs and kind of broke structure. So where do we look to trade into? Well, this is really just where, in this time frame, it looks good on the 1 hour, but in this time frame, it doesn't. So you just have to scale in, guys. So it happens to be right here. We can see liquidity being run on both sides. We have that repricing, that last selling volume before the expansion. All right, it's probably better seen on like the 30-minute maybe. See, we had that sell into that level to buy it. We had the repricing, that sell off that failed to make the lower low, and we made the higher high after that. We created equal highs then. So that's buy side liquidity. I would like to then take this long. So that's our first level of interest, that area of demand. We're just following structure. And look what we're doing, beautifully creating sell side and buy side liquidity. 1, 2, 3 touches. 1, 2, 3, 4, 5 touches here. So we're building a lot of liquidity prior to coming into these levels. We've finally come into this level, which, yeah, I'm in this trade now. I'm, gonna close in a couple hours in profit, meaning the market's gonna close in a couple hours and I'll be closing in profit. But I think it'll probably sweep the low come next week. It always does. It always sweeps Friday low or high. So likely we'll see a little bit of a sell-off and hopefully we'll go long, right? Because we're in a level of interest to take buy side after we've just taken sell side. And now we're looking to target equal highs and then a higher high, because this is a higher high, a higher low, a higher high, a higher low. We are looking for a higher high, 90, psychological level, 90. What if we continue short? Because technically we're still kind of counter trend bearish. Low, high, low, high. Could we make a lower low and have a deeper retracement before expanding again? Absolutely. So this is why we have to look at the higher time frame. We zoom out and we see the higher time frame structure. It's kind of hard to see, but this is one expansion. This is one pullback. This is one expansion. All right. This is a series of expansions. That's one on the higher time frame. Series of expansions. That's one on the higher time frame. So if this is the pullback, so this is the high that generated this low, in which we can see swept liquidity here by that wick. So we have to break that high before we make a higher high in the higher time frame. Where do we do that? We did it right here. So technically now this is a new leg to the upside. So just treating it just like a regular structure point, where could we be pulling back into? Well, look at the pullback. We ask ourselves the same questions, guys, every single time. Look at the pullback. Low, high, failed, higher high. Now this is the new expansion. We could pull back into that demand. So if we lose here, cool, great, I don't care. We'll pull back and we'll look to long it from our higher time frame zones, the next probable area. Okay, so let's look at it. This is the failure to make the lower low. We stopped, we didn't make the lower low, instead we made the higher high. Well, where are our areas of interest? It's not very clear because it's just a huge imbalance, but if we scale in, we'll probably find something, and we do. And it's really just these selling volumes, right? This repricing, that repricing, just this imbalance, just really anywhere in this vicinity. So those two levels are what I'm looking for if price ends up coming lower. Now 83.35 and 82.675, but we could still react off that level. That's why I love intraday and intraweek and swing trading, because it can produce very good returns. It's still the same, right? Risk reward is still proportional. This is still a 1 to 5 almost. That's a 1 to 9, almost 1 to 10. That's 1 to 6.5. So I'm still getting the risk reward I need, right? But it's less stress because you're not looking at the charts 24/7, taking 10 trades a day, which you're probably going to lose 80 or 90% of those, messing up your psychology because you're over trading, and having to deal with like the lower time frame noise and the chop of the market and getting swept out by news events because you're not trading off of real levels. But if you back up, look at each and every time frame, and I put quotes around time frame because it's all subjective. Look at the areas of interest surrounding each level, right? That we talked about that level, that we scale out. Then we talk about this level. right? We could scale out again. And at that point, you're scaling out like way too much. We're not looking for areas down here because why would we be sitting on our butt waiting for weeks, right? Anyways, that is what we would be looking for. That's how we can approach trading from a higher time frame perspective, right? And having probability behind our zones. You have this area. If it works out, great. If it doesn't, you have your next probable zone. If that works out, great. Because why? If this works out and that doesn't, you're still net profit. Because the probability of you going long versus short is higher. It's just a simple-minded approach. Even dummies can understand it. I should create a book called Trading for Dummies because it's not that difficult. AUDNZD. So we've talked about this before. Higher time frame. This was a higher time frame level. We created buy and sell side liquidity. We had a buy to sell to buy, and of course we had that repricing right there. So that's why we came into that region, right? And we built liquidity before that. We had that sell to buy. I'll just scale in now so you guys can see. We actually had that break and retest. So retail tried to go short with that trend line break, but they didn't know that price was going to go long. So yep, they're probably crying now. Anyways, huge imbalance, break of the counter trend structure. We never really had a reaction off the previous supply, right? We never had that like failure to generate the lower low and then the higher high to create the demand. It was really just a blitz right through it to create that huge imbalance. So we'll just take it from an inside supply standpoint and just drag it over. So in that imbalance, that's the general zone. So we can see the structure now. High, well, low, high, low, and then we broke higher high because we came into that objective point, which came into this objective point, which came into this objective point, which came into this objective point, which swept liquidity and that low there. It's all following the same pattern. You just keep following the structure, scaling in, following the structure, scaling in, right? So now that's our higher time frame zone, right in here. So if this is a high, a low, we came into the objective, a higher high. So we're naturally expecting a higher low for a higher high. So that's our higher time frame area, right? So until then, we're counter trend as of right now, counter trend bearish, right? So we can, since we're counter trend bearish, we could potentially be looking for potential shorts setups into our level. And we can see beautifully we have relatively equal lows. So sell side liquidity, we're definitely going to come lower, whether that be now or whether we do this first and then go like that. So that's what I'm saying. You can't just, even though I tell you guys, well, we have equal lows, we have an objective, we should come into here before going long. That does not mean just to open up your MT4 account and push sell. It's the dumbest thing in the world. If you want to do that, by all means, go ahead. You're never going to be a profitable trader. I'm sorry, but you're not going to be. It's just dumb. Because what could price do? It could open up, goes up, goes up. Oh, you're like, oh, I don't want to lose any more money. I don't want to lose any more money. You close out and then boom, now it comes back down and then it goes long. Or guess what happens? It doesn't end up coming back down and then it just continues. And then this becomes the new structure. This is why, ladies and gentlemen, that we have to be treating each trade as its own. And if price doesn't come down or up into a level that we have, we can't have FOMO. FOMO kills, right? Just be conscientious of your own psychology, and that'll probably tell you why you're losing if you are continuing to lose. I'm not saying all of you guys are, but probably a good amount of you are. So we need to understand our psychology and take a step back and be like, how am I approaching the market every day? What am I thinking? How am I feeling? That will truly help you to understand what you need to work on. Because I guarantee you guys, it's not that you guys don't understand the concepts. 99% of you probably do. But if you can't get out of your own way with your psychology, and you have FOMO and revenge trading and over leveraging, it's simple things that are easy to fix, but you don't want to fix it. Why? I don't know. So anyways, we're counter trend bearish here. There's an X above this previous swing high. Why? Because we swept it. Buy side liquidity run. Then these equal lows were formed. So in the process of moving down, we broke the structure. We had high, low, high, low, high, low, high, failed, lower, low. So, we're just continuing to short off. Imbalance was filled here. Imbalance was filled here. So really there's no setup except for this higher time frame level. So what I could be looking for, since we came into that level of interest, I don't think we're going to come higher than that level. We're building buy side liquidity. I would probably just look for some sort of, liquidity run, and then, something like this. That'd be nice. right? Because they'll think of this as a break of structure. They'll think about it as a retest. Price will start to go long, and then it'll fail, and then it'll go short, right? In all reality, we came into an area of interest. We had a reaction. We failed to make the higher high. We swept liquidity. We repriced, and we continued short. Right? That's what I'd like to see. Some sort of liquidity run, obviously failing to generate a higher high above this high because we've already come into an objective point. Right? We don't need to go any higher than here, in my opinion, if we are going to come lower. So I'd like to see like some sort of boom, boom. Now we can see, okay, low, high, low, and then that will act as our area of supply for entry for shorts. So something like that. And if that doesn't happen, then we don't trade it. If it does, then great, we can take advantage of it. Something like that. I like to see continuation short into our zone. Obviously, that's definitely an area to look for longs. All right, last one, EURCHF. So Euro Swiss franc overall is bearish. Right? And I think we are going to still come down and take out that low. Maybe not for a while, but we can see overall we're bearish. Low, high, low, high, low, high, low, high, low. We have equal highs relatively. We had this previous structure point, that last buying volume. This was the end of the pullback here before the lower low. So when we start to pull back, that would be that objective point. We could come higher up into these levels, but I'm not going to talk about that right now. That's a long way away. Oops, go back. Okay. So what is going on lower time frame? Well, we kind of had an accumulation, and this is where we just have to be careful, guys, because I know I have areas in which to buy. However, we are extremely bearish, so we do have to just be very careful. But anyways, you guys know what I'm trying to say, right? Just be careful, and we have opportunities to buy. So accumulation, we ended up coming back down. Now, of course, I didn't have this drawn here, because we could have easily just have made lower high and then a lower low. Because why? We're bearish. We could have easily have done that. This is all in hindsight, right? We created buy side liquidity and sell side liquidity. And then after we had this reaction yesterday and we started to go long, I'm like, okay, why did we stop there? Well, it's because on a lower time frame, we had an area of demand. It's hard to, well, maybe the 15-minute. 10 minutes, something like that. So I think it's better seen on the lower time frame, but we can see the accumulation. This is sort of the break of structure, but most importantly, the failure to make the lower low. This low never made a lower low below that low, and that's where we started the uptrend now. So that's our last selling volume, but we actually came a little deeper into our lower time frame last selling volume, I think like on the 5 minute or so. But anyways, we built liquidity prior to coming down into that level, and we had a reaction. We pushed up, we had a repricing, and then we had consolidation, and now we're pushing higher. So that tells us we could probably look to go long. Buy side liquidity, equal highs here. We have an objective point up here maybe. So, I mean, it's counter trend, but it's a potential opportunity. So that's why we just have to, maybe use lower risk. But looking for a pullback, maybe that 1 hour 50 EMA could come into place. So that's an area of demand, or we come back down into here and go long. If you guys are waiting for more conservative approaches, what you could do is wait for the counter trend to break. Currently, the counter trend is here. Low, high, low, high, low. You can either wait for the break and the pullback to go long, or you could wait for low, high, fail, higher high, and that will turn into demand, and that will be more highly probable because you're having more confluence. Not to say that we can't go long from here. If we're going to go long, we're going to go long. Who knows? But if you want to take the risk, you can. I would just recommend using lower risk because we are so bearish. But if you want to be more, conservative, wait for the failure, higher high, confirm that the fact that, okay, we've come into the accumulation, we've swept sell side liquidity, we have had a reaction, we're failing to generate a lower low, we're now creating a higher high, we're now likely to continue bullish, right? Because then this would be the high, a failure to make the lower low, we stopped, and now we're looking at making a higher high now. That would tell me that we're probably going to be in this overall pullback phase, potentially. So I have these levels here and here, but again, more conservative, fail, higher high, that would be great for longs off that third drive. And I'm not saying right there, I meant like this, boom, that third drive. All right, so that's all that I have going forward right now. Obviously, a lot will change during the week. A lot of stuff will come to fruition throughout the week. August has been a very crappy time. Typically, August and December time are really bad times to trade. This is really where the hedge fund managers are going out on, their beach trips and in December on their mountain trips, going on vacation, right? So not a lot of volatility, not a lot of volume. We have extremely slow markets lately, and there's nothing we can do about it. We just have to be patient and wait, right? So hopefully stuff will start to pick up in Q4. We'll just have to be patient and wait for that. But of course, guys, if you have any questions, feel free to reach out to me or a member of my team. We'll be happy to help you. And if this stuff resonates with you and you want to learn how to see the market in this very simple way and just aim for probabilities, then feel free to head over to my website, arielfxtrading.com, book a free call with me. I'd love to talk to you about how we can best help you and help you along in your journey. And we're posting this stuff every single day in our VIP group. We're posting these areas of interest, very clean, very crisp, very highly probable. Of course, we don't win every trade. We do lose. We're human beings, but we learn from the setups. You can take the setups, and I'm sure you're going to be profitable with them. So guys, have a great weekend and happy trading come next week. Take care.